Afternoon, good morning, or good evening, depending on where you are in the world. It's a pleasure to be here with you guys once again. Now we're back, and we're back with an exciting session. This time, we'll be reviewing the predictions that we made at the start of the year, and we'll be reflecting on how the year has gone so far and how on track we were in our predictions. But before all of that, I'd like to introduce our newest joiner to the research team, Darius. And I'm sure some of you guys might have already met him in person, for those of you who are our clients. But we're very excited to have him join. So Darius, I'll let you introduce yourself very briefly.
Thanks for the intro, Max, and also a warm welcome from my side. I've joined the 21 Shares research team in April as a research strategist. And together with the rest of the team, we reviewed all the predictions that we made at the beginning or like at the end of last year. So I'm very excited to go through them and see like how right or off we were or where we're standing with them. Yeah.
Exactly. Thanks, Darius. And for those of you who read our State of Crypto at the start of the year, here's a refresher on our predictions. So we made 10 main predictions with 2 bonus predictions, 11 and 12. A lot has happened throughout this year already. So we thought it would be worth to do a mid-year review, check on the state of these 12 predictions. But for that, you guys will have to wait for the official release of the report, which will come out next week on July 17th. In this session, Darius and I will take us through half of these predictions. So we won't be revealing all of the insights which will be on our report. But we hope that this teaser gets you guys excited, not only for the report, but also for the second half of the year, which looks to be quite an exciting one in the crypto space. With that being said, I think we can kick things off and start with our very first prediction that we made at the start of the year. And this one was that another nation state will adopt Bitcoin as a strategic reserve asset. And here we've given the score of 4 out of 5. And the reason being is we see that, Bitcoin is actually being implemented as a strategic asset, or there's steps in the right direction for another nation state to adopt it. And not only that, we are also seeing a lot of growth of also corporate adoption. So we haven't given it the full marks because it's maybe overshadowed a little bit by the heavy adoption we've seen from corporations, but nevertheless, it's very much on the right track. So let's unpack this a little bit. I think the main thing, or the main pointer, would be all the things that are going on in the US over here. So in March, the United States formally launched their strategic Bitcoin reserve and actually became the largest national public holder of Bitcoin with just around 200K Bitcoin. In that jurisdiction, we actually started more with state level kind of bills and reserves being passed through. So the first one, for instance, was New Hampshire. New Hampshire became the first one to allow its treasury to allocate up to 5% of public funds to something like Bitcoin, which was really a landmark moment because it was, the first passage of a state level bill. And this was around early May. But now we're actually seeing more and more implementations at the state level in the United States. So I think the most recent example would have been in Texas, where I think it was now a month ago, it now became the 3rd US state to formally establish their reserve. And I think with this one, what's quite interesting with the Texas reserve in of itself is that firstly, it is the first and the only state to pass a bill standalone, meaning that it stands outside or is managed outside of the state's general treasury system, which is quite an interesting development because what that means is it's firstly overseen by the Texas Comptroller of Public Accounts. But what this also means with a bill that was signed in unison is that it protects the bill from fiscal sweeps and essentially guarantees its legal standing, even if no Bitcoin is purchased by next year. And so this is quite a big development, and this is just at the state level, but you see that the building blocks for a reserve at the federal or national level are already taking place. And I think one quote that was quite interesting from the state senator, Charles Schwertner, was that he said, "We can buy land, we can buy gold." And I think the state of Texas should also have the option of evaluating the best performing asset of the last decade. And this is what it's all about. That we should allow nations and states to have the opportunity to invest in something like Bitcoin as a strategic asset, no longer in the vein of kind of speculation, which is what a lot of Bitcoin anti-Bitcoiners would have been saying a few years ago. Just to put it into perspective, there were a total of more than 200 total measures introduced across 44 states in the US. So it's not just these three. And we actually still have 15 current live Bitcoin strategic reserve bills across 26 different states. So it's going in full force here. But I think one thing that people might wonder or might question is, why is this happening, right? And I think for that to be answered, we also take a look at macro. What we're seeing in terms of macro is that there is a lot of fiscal stress globally, not just in the US, but also in Japan, where treasuries seem to continue to have dampening moments. We also know with the recently signed Big Beautiful Bill in the United States, the fiscal issue won't necessarily go away. And this is turning investors into hard assets like gold and Bitcoin. And as some of you already know here, Bitcoin shares a lot of these properties as gold does. And so now more and more people or more and more states and countries will look to Bitcoin as an opportunity to hedge against fiscal stress, but also against future potential monetary debasement that may come from that. However, it's not only in the US. I think Darius and I will know that a few years ago, this all started with El Salvador, but now it's also going through to other nations as well. So Japan and the Czech Republic, they're actively exploring different kind of Bitcoin reserve strategies. And Pakistan even used the 2025 Bitcoin conference to announce their own strategic reserve as well. So this is happening in full force across several jurisdictions. And it confirms our thesis that as nation states will increasingly begin to treat Bitcoin as not a speculative asset, but as a long-term store of value and a hedge against fiscal and monetary instability. But Darius, I think the one angle we might have missed here, or not necessarily missed because we did mention it, but one that perhaps sped up even quicker than nation states would have been that in the corporate sector. So even in the corporate sector, we're seeing Bitcoin and also other digital assets, but predominantly Bitcoin, be introduced at a rapid pace. So everyone's favorite baby strategy has continued to accumulate, and they now hold, I think, around $65 billion worth of Bitcoin. But there's several other implementations here. For example, the hotel management firm MetaPlanet, now turned Bitcoin treasury company, they hold also around 15,000 Bitcoin. And I think aside from the use of it as a store of value asset, what's also interesting here is that kind of demand and supply dynamic that happens as a result of this ongoing accumulation of Bitcoin. So if you put it into perspective, corporates have acquired around 480,000 Bitcoin so far this year, which is actually 6 times as much as the Bitcoin mined this year so far. So aside from this being a very big kind of step in the legitimacy of the asset, it also has a direct effect on the kind of supply and demand factor here. So altogether, I would say this prediction, we were pretty much going in the right direction. I still think another, nation state will formally adopt it beyond what we've seen so far. But it looks like corporates are actually outweighing the pace compared to nation states. But nevertheless, a very, very on the nose prediction, I would say here.
Actually, we were spot on because when we made this prediction, Pakistan didn't yet announce their Bitcoin reserve, which they did. And we're talking about nation states here. So very unbiasedly, I would give us even a 5 out of 5 when we are just looking at the headline prediction that we did. But I think that's not only the only thing that's very exciting when it comes to Bitcoin. And I think with this, we can go over to the second prediction that we want to talk about. So when we wrote our initial report, we made the prediction that Bitcoin scalability solutions will drive the TVL, total value locked, over 10 billion US dollar. And we wrote this report in early October, and actually we front run. So this prediction was for 2025. Already in November of last year, the 10 billion mark was reached, and again later this year in June. Right now, we are slightly below the 10 billion mark. But what this strong increase in TVL on Bitcoin scalability solution shows, and when we're talking about Bitcoin scalability solution, we're talking about layer 2s, roll-ups, side chains, so basically networks that are building on top of Bitcoin. Similar like we have layer 2s on Ethereum, but in Ethereum's case, it's mostly about scalability. And in Bitcoin's case, it's more about allowing smart contract functionalities, which are kind of limited on Bitcoin itself, but on those sidechain rollups, L2s, you can have like similar logic and applications than on Ethereum, which is very exciting. And the strong increase in TVL also shows that many investors, but also developers are exploring the space. One of the largest narratives or use cases is Bitcoin staking, which isn't really native staking as Bitcoin is proof of work, but it's some sort of lending out Bitcoins to secure other networks. And two of the biggest projects there are Babylon and CoreDAO, which has amassed over billions. So I think over 60-70% of this TVL number is just Babylon and CoreDAO's staked BTC. But we're also seeing like a bigger and bigger DeFi sector emerging for Bitcoin. Notable projects are Stacks, one of the oldest, most established Bitcoin L2s, which had a major protocol upgrade called Nakamoto upgrade earlier this year. They launched SBTC, which is a native Bitcoin. We have other projects like Mezzo, Corn, Bob, and many more who are launching their mainnets from testnet. And we can expect actually to see more and more traction use cases, dApps to use on those layer 2s. So I think the number, the next time we're going to probably talk, will be even a lot higher than the 10 billion.
Yeah, it seems we were a little bit overly excited about this, or we got it so right that it came actually before the year turned. Maybe we should have been a little bit more, let's say, bold with this prediction, but the growth there, as you can see, it really skyrocketed. So, but beyond all because it sounds like a lot is happening, and as you mentioned, all these different projects are working to build on top of Bitcoin. But for our investors here or people who are maybe a little bit less familiar, I think, and maybe correct me if I'm wrong, Darius, but if you agree with this, I think the main exciting thing about this is that it can turn an asset that, while it's in our view, one of the most compelling investments of our generation in terms of functionality, it's quite vanilla or quite limited, right? A lot of Bitcoin sits idle in wallets, and it is a lot of it bought in for that kind of proposition as a store of value. But I would say that what's exciting about this is that now you can put your idle Bitcoin to work, right? That's the angle.
I think that's a great point, Max, which you mentioned. So besides Bitcoin's store of value characteristic, which is currently mainly used, those applications or infrastructure protocols allow investors that want to look for additional yield to use their Bitcoin for this. And this is optional. So this is not on Bitcoin itself. Bitcoin is not really touched. It is what it is at the current stage. There are discussions to maybe also allow smart contract compatibilities on Bitcoin itself, but they are more further down the line. And I don't think we're going to see this happen anytime this year, maybe in the coming years. But I think the greatest thing is just giving investors a choice how they want to use their Bitcoins. Should it be like gold in a wallet, or should it be like something that's yield generating? And I think when we're talking about this, we can already go to our next prediction, where we weren't that right spot on like the two previous one, which Max and I talked about. So we made the prediction that Ethereum's revenue renaissance will begin in 2025. And I think when we would have left out the word revenue, we would have been spot on, because Ethereum is really coming back. We see a lot of initiatives. We have the establishment of a company called Etherealize, which is a for-profit entity, which is aligned with the Ethereum Foundation, that's looking to bring more traditional finance player on Ethereum. But if you look at the actual protocol revenue, it hasn't really picked up to the levels that we have seen in 2020 and 2021. But on the other side, the layer 2 ecosystem on Ethereum is really booming. And this is also a quote from our report. So we just had a major announcement that Robinhood is launching their own Arbitrum-based layer 2 for tokenized stocks equity, which is very exciting. And we also believe to see like many more traditional players like Visa to launch their own layer 2s within this year and the coming years. And I think an issue why we haven't really seen Ethereum's revenue increasing is also the upgrade that I believe was in April, which is great for users because it reduced fees, but isn't that great for the protocol because obviously it generates less fees. And also one of the issues of this is that a lot of the activity or most of the activity by now has moved to the layer 2 blockchain. So we see Base doing great, Arbitrum, Optimism, and others. But Ethereum as a main chain isn't currently directly profiting from this. But we also believe to see, and there's a couple of EIPs, Ethereum Improvement Proposal, and other upgrades, and also applications like restaking, like Eigenlayer, that could increase Ethereum's protocol revenue in the future. So while it hasn't materialized now mid-year, we believe that this will happen sometime in the future, since there's like many trends looking for this. And I believe also that many of the layer 2s will try to share more revenue with Ethereum because in the end it should be a symbiotic relationship and everybody will benefit from this.
Yeah, I agree. I think what's clear is obviously we have to be honest and say that the revenue hasn't bounced back, but we do think that the building blocks are all there for this to actually happen. Firstly, in terms of the different layers building on top, we have all these different traditional firms building on top, and as Darius mentioned, the greater the usage of these L2s, or also the more revenue they choose to share back then with the Ethereum main chain, then of course that revenue should bounce back. But as we noted, it hasn't yet bounced back, but the L2 adoption, the layer 2 adoption is already thriving. And yeah, this quote, I was really happy to be able to put this this little quote or this little soundbite on the deck because we actually pinpointed specifically Robinhood, and it actually has now come into fruition if you have followed the latest developments, or as Darius mentioned. So we're not on the nose so far. There is still definitely a couple months to go to see if revenue bounces back. But as Darius said, we think this will take a little bit more time. But the building blocks are definitely there. Cool. Moving on. And of course, we have to talk about ETPs. I mean, you guys will know that this is our area of business, but this is one prediction we made as well. We think ETPs will continue to drive institutional adoption, and we believe that by year end, they will reach around 250 billion in assets under management across the whole world. So for now, we think we are on track here. They have clearly become the gateway, and we now are at record levels of assets under management, with acceptance growing jurisdiction by jurisdiction. So at the time of the prediction, or at the time we had actually written the prediction, I believe that the assets under management stood at around 100 billion. And when we made the prediction initially, just for you guys to know, we thought first, let's go for 150 billion, but we decided to be a little bit bolder and look for 250 billion, which we do think is actually going to happen. And the reason being is exactly what we said. They have become the kind of clear gateway for regulated and transparent exposure to the crypto asset industry. So when we made the prediction at 100 billion, then of course, following the US elections results, flows surged by around 20 billion, as you can see from the black line. But that pushed together with price performance to the new year at around 150 billion. For those of you closer to the markets, you guys will know that Q1 and Q2 of this year was riddled with a lot of macro heavy topics, from the kind of trade and tariff, global trade and tariff war that we've seen, to other geopolitical events occurring in the Middle East. It was a persistent and challenging macro environment. But nevertheless, since then, we've continued to see inflows into crypto investment products worldwide. And now, as of kind of mid-2025, assets under management sits at around 180 billion, with 11 billion in net flows this year. Bitcoin, of course, remains the cornerstone. I think it represents around 80% of the market. and actually investment products of Bitcoin hold more than 6% of Bitcoin's total supply. And it's actually more than any other holding category worldwide or across any other vertical. So that once again shows how ETPs are the preferred way to get exposure to crypto assets.
I would also maybe add to this, Max, that while we weren't spot on yet with the 250 billion prediction, I think, as you mentioned, we are at 180 billion. I believe when we're going to do this review at the end of the year, we could see this number, not just because I think there's going to be still increasing interest in the existing ETPs, but I believe that also like we're going to see new ETFs in the US to be approved, which could also increase the assets AUM within those product classes.
No, precisely. I think the pie itself will grow, and as you mentioned, the more kind of ETPs or solutions are available out there, we expect that can continue to be a driver of flows. And I think like one thing that people or that we need to keep in mind is that we had a very heavy macro riddled period to the downside. Largely, a lot of the news was news that would negatively affect a risk on an industry or asset class like crypto is largely seen. But I think if macro conditions improve, which, we're slowly getting resolutions to different trade topics, for example, and potentially with some rate cuts in the horizon in the US as well, if we look at just kind of capital appreciation, it needs just around 35% rise in valuations alone to reach this 250 billion. So for example, that would mean Bitcoin to reach around 140,000, which is not too far off our own personal opinions or views as to where Bitcoin could reach. So I think even with just no new inflows and just capital appreciation, I think we could even reach there. But as you mentioned, we expect more inflows regardless. So I think we will definitely be reaching 250 billion, and not just with new kind of offerings in the US, not just with macro conditions improving, but also more jurisdictions being open or potentially open to allowing for crypto ETPs. So for example, the US states, the ones that we just mentioned in the first prediction, a lot of them are advancing laws to allow their states to actually purchase Bitcoin, but through ETPs. So they also realize the value of having a transparent and regulated vehicle for your exposure. The UK as well, while it's not formally put in place yet, the FCA is moving towards ending their retail ban. And in Japan as well, the Japan's FSA, the Financial Service Authority, they've proposed reforms as well to potentially lift restrictions on the crypto ETFs. So not only is this happening, not only do we think this will reach there, but again, we're actually very much on the right track here. Now, I think we can move to something maybe a little bit more for our crypto native audience, or for those of you who actually do some exploration on chain. But it's a little bit about DeFi here. So maybe Darius, I'll let you take this one.
So we made a prediction that revenue sharing will completely change the investment case for DeFi. And checking on that prediction half a year later, actually a little bit longer, we gave ourselves a 3 out of 5. While tokens currently don't share revenue, especially the regulatory clarity environment is gradually improving. And I would say that's partially correct. So we haven't seen like revenue sharing on major protocols like Aave and Uniswap yet, but we see revenue sharing on protocols like Pendle or Ethena. And we believe that probably like end of this year, we could give ourselves a 4 or even maybe a 5 out of 5 on this prediction. Because as said, the regulatory environment is changing. We have potential ETF approvals in the future, and more clarity, especially in the US. And I think as soon as the protocols feel comfortable, it's relatively easy for them to allow this fee switch. So one could even expect Uniswap to allow make a fee switch once regulation seems to be clear or favorable to allow this. And I think when this will happen, the investment case for DeFi token will definitely change, because currently those DeFi tokens are mainly governance tokens. Obviously, when there's a revenue share with it, it's a different type of investment that you're looking for. And also, the reason why you would invest in those tokens will strongly change. So currently it's mainly narratives. So you invest into a lending protocol or DeFi project because you believe in the narrative, the community. I would say only a minority of investors actually participate in governance votes, which is the main use case currently. But if we're going to change or like allow this fee switch and those assets are yield generating even, it's going to be a completely different type of investment that investors will probably look then for which projects are the most profitable, which 𝕖𝕤 would be a big example, which has set record after records if you look this year, what they're doing. And those tokens will probably be have higher investor interest than the ones with lower profitability. So we're gonna have this move from narrative focus to profitability focus, and we're gonna see then similar reasoning for investment as with like traditional company investments through equities.
Yeah. And I think just to be clear here for those in the audience as well, like DeFi as a product, generally speaking, I know we're talking about a very wide landscape here, but DeFi as a subsector was something that we've always seen a tremendous value in, especially if you're using these protocols. They allow for all sorts of financial services, but with the benefits of kind of blockchain technology. But the problem, as Darius noted, was that the tokens themselves, in terms of investing into the projects, they were not very interesting and largely mirrored just governance tokens. Now, if if these projects are allowed to share revenue with the end investors, you kind of have equity-like mechanics with kind of, you know, it would be a lot more interesting for an investor because you actually are receiving part of that revenue that they are generating. And as you said, this shifts a little bit the mindset more from narrative based to something actually based on fundamentals. And next week actually is dubbed the Crypto Week in the US, if I'm not mistaken. And recently, I think the SEC proposed an innovation exemption for DeFi, which would allow would in theory allow for potential revenue sharing, but it's more of, I think, a sandbox playground environment. But regardless, you see that regulatory clarity is gradually improving, and maybe next week we actually get a little bit more hints as to when this could fully materialize, actually.
So I think like to close this prediction off, I think there's a lot of exciting developments within the DeFi space, and I think more and more we're gonna see the let's say like the initial dream of DeFi becoming reality.
We had DeFi summer not too long ago. Maybe this time it's DeFi fall.
Yeah, I like that.
Cool. Now I think this might be our last prediction
Mhm.
actually that we're gonna spotlight this time around because we do, of course, want you guys to read our report. But now we're talking about stable coins. And I would say that, stable coins are and have the clearest kind of product market fit in the crypto space, right? I mean, what we think of it in the on-chain or in the crypto world is we really see it as a kind of gauge for liquidity in the whole crypto ecosystem. And so stablecoins are handy because it allows traders to trade easily in and out from, something like Bitcoin, but into something stable like like the Tether stablecoin or whatnot. But aside from their value in the on-chain world for liquidity provision or quick kind of back to safe haven asset, in the real world, they also have tremendous value, and we think they have tremendous potential. And so our prediction here was maybe a little less targeted onto what can happen for stablecoins in the on-chain world, but how can they start to make inroads in the traditional or real world? And here we gave ourselves a full score, a 5 out of 5. We think that, I mean, if you guys have been following the news, every week there is a new development on stablecoin integration, whether it's in Europe, whether it's in the US or in other jurisdictions. And if we look at the numbers, it's clear. I mean, total stablecoin supply is at an all-time high. It's at around 252 billion and is up around 100 billion year over year. Active stablecoin addresses are up 50% year over year. And in emerging markets, they continue to be used as a hedge against local currency volatility, but also as a way to, repatriate payments back to loved ones, for example, if you lived abroad. But beyond that, I think what we're seeing a lot of is in the US, we see a lot of policy developments that actually pave the way for a regulated and institutional kind of ecosystem that uses blockchain technology as its kind of, settlement or as the base layer. And our prediction here that financial institutions, Web2 companies, or different states will deepen their stablecoin adoption is playing out completely. So in the US, for example, the Genius Act stablecoin legislation is gaining a lot of momentum. And the leading kind of legislation here would be the Genius Act. And here, it's another comprehensive federal oversight, which would have bipartisan support. So that's expected to move forward actually real soon. I believe, if I'm not mistaken, it was signed in the Senate, and now the House has opportunity for reconciliation or making amendments. But Donald Trump is really pushing as well for this signature. And as I mentioned, next week is Crypto Week, and the Genius Bill is something that's actually set to be on the agenda. And so I would imagine that we would actually get some further news on this next week. But altogether, the Genius Act or the Genius Bill would create this framework similar to what we already have here in Europe with the MiCA framework. But this, again, solely focused more on stablecoin issuers rather than just all crypto asset providers. But not only in the US, internationally as well, we have Hong Kong. They've launched a stablecoin sandbox kind of pilot alongside also what's called a licensing regime. And in Thailand, there's also a pilot of a baht-backed stablecoin. So this is taking place across many different fronts. And we think it's crypto's best product market fit. And aside from all the kind of utility or benefits that stablecoins can bring into traditional world, but also in the crypto world, I think it ultimately also builds a more resilient crypto economy as well. Because if I think of investors in the next potential bear market, right? If you have to take liquidity fully out of the crypto ecosystem into the traditional world and you offload and off-ramp completely, it would potentially take you more to re-enter and redeploy your capital. By having something like stablecoins, which individuals can easily move in and out of, when ultimately they don't want to be fully invested but want to sit a little bit on the sidelines, they can do so with stablecoins. It can also redeploy capital more easily. And so if this is integrated also across more traditional sectors in a more formal way, it would also allow those traditional players to deploy and undeploy in a much easier manner. So we think that this prediction is very much on the right track and is actually, I would argue, already fulfilled, even just halfway through the year.
I would agree, Mike. I would just add that we're going to see a lot more happening on stablecoins till end of the year and future. Currently, it is crypto's most successful use case, which has clear product market fit.
Yeah, and I mean, we could talk about here for hours. I mean, we could talk about branded stable coins, the ones that have been launched by kind of First Digital or World Liberty Financial. So there's definitely
Yield-bearing stablecoins.
Yield-bearing stablecoins are also becoming top of mind. So there's definitely many things we can talk about here. The only other thing I would add, maybe for people out there who are wondering, well, it is a stablecoin, right? Like, how can I, benefit off of this as an investor? I think there's kind of two ways. Of course, you would have all heard of Circle, of course, going public. You can, of course, invest in the Circle stock as a business. But I would argue the other way, aside from maybe using yield-bearing stablecoins that Darius just mentioned, is let's keep in mind that all these stablecoins, they live on different blockchain networks, right? And each and every transaction that is generated on that network generates some revenue and needs the token to be used. So it generates demand for that token, which in the end can prop up the price. So I would argue that as a proxy investment, maybe, or as a proxy way to get exposed to stable coins, choosing the venues where they are most used or where they're most traded could be a solution. But yeah, no, that's not meant as financial advice, but meant more as an educational side note. I think that's our predictions for now. We didn't want to spoil every detail and all the news and all the exciting things that we have in our report, which is coming out next week on July 17th. So please be sure to check it out. I'm sure you guys will see it on LinkedIn and across social media, but I would be sure to definitely check it out for the other predictions that we didn't have a chance to talk about today. And now, as always, we'll be happy to take your questions. I know I've already seen one in the chat already, so we'll open that up. All right, so slide 4. Is this the worldwide Bitcoin ecosystem? I think here we're talking about this slide and what is included in the ecosystem, all use cases without purely investment accounts.
And let me maybe answer this question. I mean, yeah, this is a global count, so it's worldwide. What's included in it? Included in this are like the Bitcoin staking protocols, Babylon Core DAO making around 60-70% out of this number. And then like all the Bitcoin layer 2s, such like Stacks, Core, Mezzo, Bob, etc. So all those numbers go into those 10 billion that is stated here as the TVL. And I think the last part of the question were all use cases without purely investment accounts. TVL total value lock refers to the dollar amount of tokens that are locked in smart contracts on blockchains. So this is the dollar amount, roughly 10 billion right now, slightly below, of tokens that are locked on Bitcoin related protocols. I hope I've answered the question now.
Yeah, I think that's exactly right. So just to be clear, these are like very much on-chain use cases, right? So not necessarily investment accounts, but more the kind of deployment on Bitcoin smart contracts. I love this next question. Any market event you didn't have on the radar at all? I guess we always have the radar on everything. No, but all jokes aside, I think the one market event which maybe I hadn't anticipated as much was the slowdown a bit of the speculative wave, because I know we had the macro downturn, which of course affects kind of risk on assets, but because of all the kind of positive regulatory developments that we're getting, especially coming from the US, I would have actually had expected that kind of more speculative market that we had at the start of the year in January and February, with a lot of kind of social and meme tokens coming out. I would have actually expected that phase to last a little longer, because of all the regulatory developments and the kind of fervor around the market. But of course, that kind of slowed down as we entered February and March. So that's something I didn't expect. I thought that would have lasted for a little bit longer, so I might have also gotten burnt on the back of that.
I think the next question, Felix is asking which report we are referring to, because
Sure.
there have been quite a couple published by us lately.
Yeah, we've been publishing a lot of newsletters, weekly newsletters, and you might have also seen our Solana State of Crypto. But this is a report that hasn't come out yet, so it will come out next week and is part of our quarterly States of Crypto. So this will come out on July 17th, so it's not out yet. And yeah, feel free to check it out.
I think Max, Felix may be asking for the original report we published and we were referring to.
Right. Good point. Your head is a little bit more screwed on than mine today, Darius, but we will follow through with the original link report. Maybe Darius, if you could find it online and respond here, that would be great. Well, I'll move over to the next question. Thank you. What is your outlook on meme coins? I think Darius and I have a slightly split opinion here, and I would start off by saying, just like every other crypto asset or just like every other kind of subsector or crypto token, they are not all the same. And it's quite easy to categorize at a high level, meme versus not meme. But I would argue that they do serve a role in the crypto ecosystem. I think what was most notably was with Solana, for example. And I think there is no use case that drives as much activity, as much fervor, and as much usage of a network up until now as something like meme coins. And so what it did, for example, for Solana was really battle test its infrastructure. It was able to prove that it had actually resolved a lot of its previous issues. And as a result, you can see that meme coins were the testers of the infrastructure, But after that, it will be things like tokenized equities, stable coins, and other different tokens. So I think on the one hand, it can battle test a lot of infrastructure. On the other hand, I'm a believer that community is quite important. We have that in the physical realm with friends and family. We have that in the digital realm with online friends and people that we talk to on social media. And now we have it via tokens where you can be a part of a collective and a community and also be financially involved in that as well. So I see a lot of benefits to it, but I also see a lot of risks to it because of how easy it is to launch meme coins, because of how easy it is to launch these tokens. A lot of it siphons retail, and a lot of it hurts actual retail investors because it's very difficult to be able to look at what is a legitimate investment and what would not be. And so there's downsides and upsides. And I think, as you can tell, I could go on this topic for hours. So maybe I'll have.
Maybe let me just add on the question of meme coins. So, I mean, there's, as you probably know, a lot of meme coins. So they going to do differently. But I think something that could be a catalyst to bring them more into mainstream adoption is like the ongoing rumors that Pump.fun, the platform where most meme coins were issued in the last 2 years, is launching their own token. If this is happening, one could maybe see also again increased interest in usage of Pump.fun and meme coins. But again, as with meme coins, everything is highly speculative, high risk. And as an investor, you should be aware in what you're investing in. Yeah.
Yep. Thanks, Darius. What is our observations of the DePIN sector? Oh, I'm sorry we didn't include prediction 11 in today's session, but it is actually a chapter of our state of crypto. Sorry. So it's in prediction number 11. So we definitely do talk about the DePIN sector with, I think, quite a big spotlight on helium. So I would say that, year-to-date observations, I would say helium has been growing tremendously in terms of kind of user count as well. But Darius, if you want to
Yeah.
talk a little bit more about this one, go for it.
I mean, as you said, Max, I mean, Helium had some interesting development. Generally, when it comes to DePIN, the narrative has a little bit cooled down if you compare it to earlier this year. I mean, we saw initially last year a trend of like DePIN projects moving from Ethereum over to Solana. Generally, one of the issues with DePIN projects are that it's especially the demand side. So while on the supply side, there's plenty, there's not so much on the demand side. I believe DePIN is relevant and also will come back to the spotlight. I also see like actually a couple of like interesting use cases connected to AI and DePIN, which are at the early stage, but I think could become something bigger in the foreseeable future. So, I mean, to briefly answer your question, DePIN is currently not as hot as it used to be, at least like in the headlines. But there's a lot of interesting developments going on in the space, so I would keep my eyes open. And not as financial advice, but again, it's always good if you're into something before it gets hot again. So that's why I wouldn't say DePIN is dead.
Yeah, and I mean, if you look at I always like to look at the addressable market size compared to what it's trying to achieve, which is typically, the traditional infrastructure sectors, whether it's mobile, whether it's telecom, whether it's geo mapping. And these are sectors with huge market sizes, but not only that, but where it's largely controlled by kind of one entity. So in the example of Google Maps or Apple Maps, you now have a competitor in Hive Mapper, right? And so by kind of building this infrastructure through kind of the communities work, I think in a sense, this is only a matter of time before people see the value in it. So as Darius said, it might not be as hot now in terms of being in the headlines, but that's also because we have so much in the headlines in terms of what's going on in crypto. Next question. What is the biggest risk on the short term that could trigger a downward moment in the crypto? I would argue, what I'd like to look at, of course, at the moment, I would argue that a lot of the market is largely driven, of course, by Bitcoin this year. I mean, if you look at Bitcoin dominance, it's continuing to kind of trend upwards. I think it's around 60 or 65% right now.
Maybe let me slightly interrupt you, Max. I just want to mention we wrote a paper about is altcoin season dead a month ago. So especially since Max mentioned Bitcoin dominance, both in terms of performance, narrative, and mind share. And a lot of investors are asking themselves, obviously, like, what's with all the other coins? Check out the research report on our Insights tab on the 21 Shares website. I think there's going to be some interesting insights on this.
I agree. On that front, I think Bitcoin, if you look at the price performance over the last 1.5 months, it's been kind of trading very range bound between like 95, 96K to 110K. So volatility is quite compressed, as you could see over the last few weeks, months. And I think we are waiting for either a development to one side on the upside or the downside. Given that it was a period riddled with macro uncertainty and also the kind of unfortunate eruption of more geopolitical tension, I would argue that the market swallows the Bitcoin at discounted prices when there's these shocks, as we can see in the last few weeks, but it is waiting for a big kind of catalyst to move to the upside. Your question is on the downside, though. So I would argue that any kind of risk, or the biggest risk on the short term that will trigger a downward movement, in my opinion, would be a potential kind of liquidation of one of these Bitcoin treasury companies. Not because it would signal a failure of their kind of approach, but more so because of the kind of headlines that it would cause. Again, the actual Bitcoin that one of these companies would have to sell is not tremendous, and it's not something that Bitcoin would not be able to recover from. As we see when there are these shocks now, there's more hands willing to buy Bitcoin, but it would cause a little bit of a ripple effect to the downward, definitely. But again, that's not something that I would argue is a risk at the moment. I would say right now we're waiting for a more positive catalyst and a potential move to the correct side.
Just reading at the next question, I hope I understand it rightly. In how many time you predict hypothetically a stablecoin can replace a currency, for example, USD and Tether? Stablecoins are not taught to replace currencies. They're just digital on-chain version of a fiat currency. You mentioned Tether, so Tether is US dollar backed. So for every Tether coin, USDT, there's one real US dollar sitting on Tether, which is the company that does that back. So the idea is not to replace them, but basically like to extend them on chain. So I hope I could answer the question on this here.
I would also say that in the example of the US, which we talked about a little bit about macro, a little bit about treasuries, and there is a little bit of concern over the fiscal issue in the US, which might lead people to not hold the dollar or might lead people not to hold US treasuries. And I think that's maybe where stable coins could extend their usability, and that's by driving demand for the dollar, but through the digital form. So I would argue that the US might actually use stable coins as a way to extend their kind of
US dollar dominance, yeah.
dollar dominance, exactly. So I would say it would be a long time before one would fully replace the activity that the actual currency does, but it is a way to drive demand for currency.
Maybe if we go to the next question, which is the great wealth transfer is in the foreseen transmission of over 120 trillion US dollar from the older to the younger generation over the next 20 years. What investment ideas would be suitable to catch a share of these assets newly owned by the U2? I hope I interpret this question rightly. So you're correct. In the next 20 years, we're going to see the largest wealth transfer in history of humanity from the very rich baby boomers to the younger generations. And that's also an investment case that we usually do, especially when it comes to Bitcoin. If you look at the older generation or like current generations that haven't been born in a fully digital world, for some olders, Bitcoin and crypto assets in general still seem very abstract. But if you think about Generation Z and Generation Alpha, who have been born fully in a digital world, they're very much known, familiar with everything digital, maybe, and I think most likely, an investment into Bitcoin is more likely for them than into gold, which gold will seem abstract and weird for them, which is like a yellow stone. You can't do anything with it, to say it a little bit over exaggerated. So generally, I believe it's going to be a big opportunity for crypto. Because very often, and I think it's the same with you, if you're younger, you go to your parents to convince them to give you some money to invest into crypto. They're usually very critical. Some are critical and skeptical. At least it used to be in the past. I think it's different now with many. But I believe like when this wealth transfer will happen, the people who will receive this money, they're going to be way more open to make investments into digital assets, cryptocurrencies, than the older generation, which will obviously benefit this industry. And again, if you look at the total market cap of crypto, we are at roughly 3.2 trillion US dollar. That's still like, I believe that we
1%.
are 6 times less than gold or 8 times less than gold. And I think equities are like around 70, 90 trillion. So there's also like a 35x to grow there.
Yeah. No, I think you summed that up quite well. But I actually think this might be a little bit of a tangent here, but I actually think part of the reason that we might be seeing a lot of tokenization of real world assets is because part of it might be because of this wealth transfer, right? We know that newer generations are more comfortable with digital assets or are more comfortable with the internet as a whole. And by having these assets, these equities, or these commodities on different blockchain networks and tradable digitally, you might actually prop up their demand for new generations as well. That, as Darius mentioned, might not find an interest in actually buying a physical gold bar, but would do so if it can be done digitally and is actually usable across different venues. So I would argue and agree with Darius here that digital assets, I would argue, are the assets.
Beneficiary, I think a major beneficiary of this wealth transfer that we're going to see. Yeah.
I agree with you.
Maybe let me take the next one because it's again DePIN related, and then we can do the last one about 𝕋𝕠𝕕𝕖 ℂ𝕠𝕕𝕖, which we talked earlier today about it before the session. We have a question: what DePIN projects do you see achieving mainstream adoption first? I know HiveMap and Helium have traction, but when will one become a household name? That's a difficult question to answer and depends on a lot of factors. I think household name is when you, again, as mentioned at the previous DePIN related question, if you can solve the demand side. Again, supply side is given with DePIN projects, demand side not so much at the current model. And I think that those DePIN projects that can find a market that also has a high demand, they can become very big and a household name. And another development could be like partnerships or integration with like large players. So if you have like traditional manufacturers that are going to integrate like DePIN logics into their services and offering, we're also going to see a lot of traction. So there's like different like ways how one of those, basically to answer your question, how DePIN can become mainstream. So there's no clear answer to this. But as said, there's a lot happening. Why not at top of the mind share right now? I think DePIN is very interesting, and it's something investors or like people who are interested into the crypto space and decentralized business models should look into.
Yeah, I agree. I think one thing that might actually scale up the adoption of DePIN is maybe originally it was meant for everyday users to, for example, if you're using HiveMapper, you get rewarded if you are mapping using their device, your road as you travel in a car or whatever. And originally, maybe it was meant for the end consumer to do so, but a recent integration, I believe, with Lyft, HiveMapper and Lyft, if I'm not mistaken, that's an example of how maybe DePIN can benefit both the end consumer, but also the business that's leveraging it in the middle, for example. So now, for example, you could have Lyft drivers that install the HiveMapper camera, collect rewards for in the name of Lyft, and potentially Lyft could, with those rewards, push down the fares of their rides for the end consumer. And so that's a way that maybe DePIN can be integrated into existing business models to in the end, benefit the consumer and also have a more distributed way of having infrastructure running. And then the last one, how would Arbitrum's value be driven by what Robinhood does with it? I don't see it went up after the announcement. Very correct. And that's unfortunately a little bit of what happens in the crypto space is that you buy the rumor and you sell the news. And so what happened was when a lot of there were a little bit murmurs and rumors over what was happening with the integration, That is when Arbitrum, I think, did around a 15% hike. But last week, when the announcement was officially announced, as you noted, Arbitrum stayed relatively flat. I would argue that that's a short-term kind of development, right? That's a short-term trade. In the long run, one would argue that with all the kind of tokenized equities or tokenized products altogether that are coming on top of the new Robinhood L2, which is then powered by Arbitrum, firstly is the narrative angle. It's the angle that Arbitrum is the choice or is the venue of choice for these tokenized assets. And so from that angle, you could reasonably assume that Arbitrum's value would continue to grow. The other hand, and Darius here may be correct if I'm wrong, but would be in terms of all the transactions happening on top of Arbitrum. At the same time, Arbitrum, the network, doesn't use ARB as their kind of gas token.
Yeah.
So at the moment, it might fall into that same problem that a lot of the DeFi projects had, where the token itself looks a little bit more to be for governance. And so on that hand, I would say it's more on the narrative play. If you believe that Arbitrum will continue to be the venue of choice, and by extension, then Ethereum, then you could, reasonably assume that Arbitrum's value would grow in the long run.
Yeah, maybe just add to Max's point. I think a common misconception is that on those layer 2 solutions, the governance token is the basically gas token, or like the token that you use for network fees. With Arbitrum, it's actually ETH. It's not ARP token. So again, ARP is, and we talk about this, as you also already mentioned with the DeFi project, there are currently more governance tokens, or primarily used for governance tokens. This can change in future, but probably ETH is a bigger beneficiary of Ethereum than Arbitrum from this announcement and partnership.
Thanks, Darius. And the last one is not a comment, but a compliment. And thanks a lot for that. We're very happy that we're able to answer to your questions, keep you guys engaged, and we're very happy to hear that you enjoy our content. And I think that leaves us to say thank you to you guys. Thanks for being here with us. Thanks for taking the time out of your very busy days to listen to us. Darius and I love to talk. So that's, of course, we would be here anyways, but you guys make it fun. And yeah, please do read our report, which is coming out next week. If you guys agree with us, great. If you disagree with us, even better. We love to hear from you guys. We love to hear your points of view and spark discussion. So yeah, thanks a lot for the session. I hope you guys all enjoyed. And that will be it from us, and we hope to see you next time.